Summative Activity 2, so Managing Personal Finances. Now you can see here in the previous formative assessment, you listed your estimated income and expenses without all the figures at your disposal. For the summative assessment, you now need to list all your income and expenses for 1 month and list forecast amounts. That means you're going to plan for the next 2 months, taking into account everything you've learned in class. Please note, you do not need to submit your actual income and expenditure for assessment purposes. So section A, income, we're going to talk about brutto income, which is before deductions. So notice the A1 here, we're going to refer back to that. Now the columns here, income source, salary 1 is you. So budgeted income, what do you think your income will be? Now, of course, that might vary a little bit because you might have a allowance paid to you, travel allowance, or maybe you worked overtime. The word budgeted means what did I plan? Actual income, the income you received, what really happened. Now, forecast. Now, you're going to see these columns on our next slides to follow. What do you think your income will be for month 1? So what I want you to know is actual is real. Month 1 is the month that I'm in. That's real. So these 2 columns will always be the same. Now, forecast. What do you think your income will be for month 2? Month 3. It could be the same, but also not, because maybe you plan to work overtime. Salary 2, that could be a partner. Now, I want you to remember that you're only going to complete a row applicable to you. Otherwise, you're going to leave it. Investment, do you currently have income coming in from an investment? So it's important that if something applies to you, you complete all rows for me. Right, so anything other, allowance, maybe you have rental income, overtime, and then you're going to have the total budgeted income. What did I plan? Actual and month 1, that's real and it's the same. Month 2 and month 3 could be the same, but also different. What's very important when we get to our variable expenses, you must show difference. You can show difference in other expenses as well because forecast is about planning. Now, if we look at our screen to follow section B, expenses. Now, these are expenses that's deducted before your salary is paid in. And I know you're going to say to me, but I don't get this. That's fine. Of course, I understand, but you need to know, in order to control your money more, you need to know what are deducted, what expenses are deducted, so that you can know how to control your monies better. So PAYE, of course, tax. Notice we have a B1 here. Budgeted amount. What do you think your tax expenses will be? Actual amount, what did you really spend on tax? So if you thought for a particular month that you pay 4,000 Rand tax, but actually you paid 3,000 Rand tax, then of course the amount under budget is 1,000 Rand. So again, your actual and your month 1 will be the same. Now, where your expenses are concerned, it is possible that month 2 and month 3 will be the same, but also not, because maybe you've decided that medical aid needs to increase in month 2 or month 3. So what I want to ask you is that I need to see in your summative budget as assessor that you can plan. So here's medical aid, of course only if you have one. UIF, pension fund, home loan. Now, this home loan here is if you have your own home and your work deducts the premium already from your salary. If they don't, then obviously you can't fill in something like this here. Then that would be up to you to pay. We'll discuss that shortly. Garnishee orders, any court orders for accounts you do not pay. Union contribution if you have anything other expenses. And then again, all the totals you're going to complete for me as well. If we go to our finance payments, now you'll see the same columns apply, and notice that we have a B2 here. Credit card 1, if you have it. Budgeted amount is what did I plan to pay for credit card 1? Actual amount. What did I really spend? Remember, actual and month one will always be the same. So is that amount over or under? Between planned and actual. Now again, month two and month three forecast. You must show a difference there, please. For assessment purposes, you must show that you can plan. So it can be more, it can be less. Credit card two, I'm going to leave. Do you have a student loan? Remember, you're going to complete rows applicable to you. Do you have a car loan if you have your own car? Do you have a home loan if you have your own home? Now here, you're only going to complete it if it isn't in your expenses already. Remember, it will only be there if your company deducts it for you. Otherwise, you'll have to pay. So personal loan, if you have that, clothing accounts, bank charges, you definitely have that. And then, of course, all your totals for me. Then we're going to go to fixed expenses. Now, not all of this is applicable to everyone. And I want you to know these expenses are normally based on a year contract. Rates and taxes you'll only pay if you have your own home. Same scenario here. Now, again, when you go to your month two and your month three, you can show in certain of the rows that apply to you that it's the same. But especially in your variable expenses, I want to see that you have differences between month two, month three, and definitely month one in order to show that you plan. So vehicle insurance, if you have your own car, you must have insurance. Home insurance, that can be if you rent, you can have, and if you have your own home. Life insurance, additional medical insurance, this is not the medical aid, it's extra. DSTV, Mnet, or TV license. Now, please note, TV license, why is this in the fixed expense column? Because if you pay your TV license monthly, that 25 Rand, it will be there. But if you pay it annually once, it will be variable. Remember now, we are budgeting to assist you to manage your money. Anything other, and then you have your totals here for me. Notice here's a B3. If we now go to variable, that means it changes. So you have the same columns that apply. Household, what is household? That means if you put money, if you plan to put money aside to fix anything that might break in the house. Groceries, you must eat, of course, but notice that you don't eat the same every month, right? Groceries can include cleaning products as well, so show differences for me. Car maintenance. Do you plan to put money aside to fix your car every 6 months to a year? Petrol, if you have a car, otherwise travel expenses, bus tickets, etc. Telephone, maybe not in your house, but you have a cell phone. What did you plan to spend? What did you actually spend? What are you going to spend month two, month three? Of course, electricity, you don't spend the same every month. Furniture. Now, hopefully you don't buy furniture every month, but maybe you plan to put money aside just to buy once a year. Clothing, that would be cash. School. Now, you might say to me, why is school under variable? Because it's not your school fees. That would be fixed expenses. School year refers to maybe clothes or stationery that you buy ever so often. Medical prescriptions, if you have anything other than medical aid. Entertainment. Do you plan to put money aside? What do you actually spend on entertainment? And what will you be spending? Now, your memberships, gym, or any memberships. Gifts or donations. Remember that here, for example, month two. Maybe you've got parties, birthdays, etc., and you need to buy gifts. So you need to plan to have money aside, right? Vacation, somebody might say, well, what's that? Now, if you have this, if you use this option, pet care. Some people say, my pets are my children. That's perfect. We know that that's also costly. Now, other, maybe that could be takeaways. Notice here's a B4, and then, of course, the totals that you're going to do for me. If we go to our last slide. Now, remember that I spoke on our first slide about brutto income. So that's gross, not gross, gross. So here, budgeted amount. So section A1, remember the A1. Budgeted amount, we're looking at totals for 1 month. Okay, what did I plan in terms of income? Total expenses means section B1 plus B2 plus B3 plus B4. What was the planned expenses? And then I minus these two from each other to get net income. Net income is what I actually have to live off. Actual amount, gross income, section A1. Total expenses, again B1 plus B2 plus B3 plus B4. What is actual? Remember, that's the same as month one, which is why we're talking about month one. Minus these two to get your net income. That's why we say deduct total expenses from income. Total of A1 minus totals of B1 plus 2 plus 3 plus 4. Shortfall amount means, do I have too little money? Then it'll be a minus whatever. And a surplus amount means I have money left, which is wonderful. You want to be there. And that will be the end of your summative budget.